Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, September 7th, 2017. I wanted to do a follow-up to the insurance sector video that I did last week. Actually, it would be a week tomorrow. So last Friday, put together a video, and if you didn't watch it, I highly recommend it because there's still, I'll touch on a lot of those companies that I covered as well as the sector, but I still think there's some meat left on the bones on these trades here. Uh, Now, there are some that have hit targets right now. You may want to book some profits if you took some of those trades. Most importantly, when I come across a sector that stands out as compelling, especially when there's a lot of different trade ideas. I can't pick just one. I did put a few of these on as official trade ideas, but again, these videos are where it's at when I come across a sector that's just ripe for opportunity. Now, I started that last video making the fundamental case. I talked about the damage Hurricane Harvey had caused, what impact that would likely have on both the insurance companies as well as the reinsurance companies, those that insure the insurance companies, to make sure they're not wiped out with excessive claims. But of course, that's going to spill over to these reinsurance companies. And then I made mention again that we had another storm on the way at the time. Nobody really, was putting much into it. That's Hurricane Irma. Now we have it right in the crosshairs. The east coast of Florida, especially South Florida, there's just the impact is huge. This has the potential to be the most costliest hurricane I imagine by far, in history, the U.S. here. If it took that path, if it comes through as a 4 or even a 5, and rips up the eastern coast of Florida, or for the heck, the eastern coast of the southeast U.S. for that matter. So again, the potential's there for a lot of damage, and obviously this is now starting to be priced in. That's why I named the site Right Side of the Chart. You can use technical analysis to predict where prices are likely heading. I made what I believe to be a compelling case and stated it clearly that without any hurricanes, these insurance companies were priced in for a correction. It's clearly reflected in the charts. Again, that case was made in the last video. But then when you can marry fundamental analysis and technical analysis together, which is what I did with the impact of Hurricane Harvey hitting, Irma coming, and now another one behind it. It just solidifies that trade in my opinion. And I view trading sort of like the way if you watch the Animal Planet or Discovery Channel, you watch how ambush predators hunt, like leopards and cheetahs and things like that. They don't run after every gazelle that crosses their path. They sit and wait patiently for something to come close to them, an easy opportunity. And that's what trading's about. You can't extract money from the market day in and day out. At least I don't know of a strategy to do that. So you have to sit and wait. When you see these opportunities that line up, you need to jump on them. If you waited, I did that video last Friday. We were right here. This is where the insurance sector was. In fact, I'll flip over to the screenshot from that video. There it is. Here's the YouTube video from last week, and you can see where the sector was. It was flagging at that point. And again, you can see in just not even a week, we've already, as a sector, has dropped over 8%, and now down to that second price target that I had there. So we may have a little reaction here. Maybe not. It all depends on what happens. Now, this is where fundamentals really come into play. Technicals are a guide to tell us which way to position and really where to take profits, so we're not just randomly guessing. But again, this is a sector. You can't short or go long the sector directly. So we'll look at some of the individual stocks, and I'll mention those that you may want to book some profits on, or at least tighten stops, as well as those that still have potential, more downside potential or profit potential on the short side. Okay, first one up that I covered individual stocks was ACGL Arch Capital Group. This is a screenshot from the video showing you my projected path for this stock. Reaction here off the 92.13ish area, and then a continued move down here to the next target. And whether you game these reactions, it's just an area where I think a reaction is likely. But ultimately, if I draw a path there, this is the area where it's what I call the sweet spot. Where the risk reward starts to diminish, but where I think that stock is likely going. Those are what those scenarios are. So let's take a look at that one. Uh, Okay, this is a live chart as of today. Here's ACGL. So you can see from where I highlighted it last week, that stock has already produced a gain of about 4.83%. We've fallen about 5%. We've hit that first target. We're right there now, give or take. These are within, can give it, a couple basis points in either direction. But you can see we're essentially right on that line now. So whether we have a reaction or not, well, and a lot of that will probably have to do with this hurricane. I mean, people are now watching these stocks, whereas a week ago there wasn't a lot of focus on them. And so with every tick or turn of the hurricane's projected path, I'm sure it'll have an impact on how these companies trade. In other words, if the hurricane were to turn off, it projected to miss Florida altogether, then you'd probably see these stocks have a little relief rally. And if it stays on course and continues to hold strength or even strengthen from here in intensity, then it's going to look ugly, and these things can keep going down, and they can exceed those final targets. So um, either way, it's priced in the charts. This is a breakdown of a well-defined uptrend line, negative divergence warned of the impending correction. So even if we didn't have Irma or any other hurricanes on the horizon right now, I would still say this stock is going down here ultimately. I would just say there's a better chance for reaction here. So again, how you trade these, that's up to you. But I do see another, if you're willing to ride out the counter trend rallies, ultimately another 4.5% downside at least. And of course, we could go down from there. That could add some additional price targets, which I may do if this sector continues to play out the way it's looking. Next stock I had covered was RE, Everest Regroup. There's the projected path. This is again a screenshot from the video. That's what ultimately where I saw this one coming down to about the $200 level. Let's take a look at it now. And here we go, just a complete meltdown in this one. So again, we're talking. This is why I love shorting stocks. The gains in short order, stocks tend to fall much faster than they rise. Here's a great example. This stock, since the video is down about 14%. So I hear a lot of rumblings in, the trading room and elsewhere about how tough this market is to trade, whether long or short. It's giving a lot of, it's overvalued, divergences, everything else. Yet the Qs and a lot of these stocks refuse to go down. Forget about the QQQs. Forget about the broad market for now. There will be a time, and we did recently just add on IWM as a short because I think that was a very objective, about the most objective short entry I've seen, and we're I think slightly positive on that. But again, this is where the easy money is made. Shorting the broad market is very difficult because you're shorting the good and the bad. You're shorting different sectors, defensive issues, dividend-paying stocks. Don't fight it. Pick the most bullish and the most bearish sectors and individual stocks, and that's where the relatively speaking easy money. Now it's not always so easy, but in this case these were really set up, and again there's more downside in this one. Is it oversold? Yes. Are the odds for a counter trend rally increasing sharply with every tick down? Yes, absolutely. And again, as I said, it's at this point this thing's probably trading on line with the the track of that hurricane, but so far it's not looking so good. And ultimately, even if we get a snapback rally, I still think it works its way down here to the $200 level, and that's another 7% or so downside left in that stock. This is RGA. In the video, I had stated a break of this level right here, 131.60, I think it was. 131.60 would trigger an entry, and I since added this as an official trade as well. Playing out nice. It's triggered, but there's more meat on the bone on this one. There's the first target down there. Actual support's around 122. As always, I said on short trades, my targets are a little above that, and you can see the additional targets right now. Official second target and the potential third target there. That's the if things get ugly target. And again, whether or not I extend the target on this trade, both personally and officially on the site, depends a lot on what this storm does, and possibly the one behind it. Okay, I'll go through a couple more from the video, and then I'll probably wrap this up, maybe highlight any that stand out. The story is the same. This was the next one up in the video, RNR, and I mentioned here support level, that if and when that support level went, there was a lot of downside left, and I sort of highlighted this level here, about 122, and there's RNR right now down to 123 already. So you can see it took out support and just a waterfall sell-off. That's technical analysis. You can see how well that support level was defined. And, back when, the stock was highlighted up here, that's already about a 10% drop. And again, under a week. So this is the easy money. You don't always get these opportunities in trading, but when they do, you just have to, you can't wait. You can't sit here and say, well, okay, there's a storm coming. There's already huge damage from one, another storm on the way. You can't wait till you start hearing about it on CNBC and everywhere else. Oh, the insurance sector looks bearish. You've got to get in front of some of these trades because I said not so important on the long side, but on the short side, you occasionally have melt ups on the market or in certain stocks on the long side. It does happen, but this is much more common in short selling when you have a break of support to see these waterfall type sell-offs. Okay, and just to point out, in that video that I made a few examples like this one, WMIH. I believe I covered this one saying that not every company looked bearish. So that's why even if they had a sector ETF for the reinsurance sector, which we're covering here, here's the watch list. These are the components. You can see some down, double digits just today alone, and many down double digits since that video. But I mentioned this one looked more bullish than bearish. This looks like a falling wedge type pattern, a downtrend line, bullish divergence, and you can see here's a stock that's been unfazed and it's in the reinsurance industry. So let's just look and see if any more stand out. This one has not yet broken down. Maybe they don't have exposure to the property and casualty sector. Maybe they do, but they only insure out in the Midwest or somewhere. I don't know, and that's why I said, I don't. There's not enough time in the day. I pour through charts every now and then. If I have a favorite company or trade idea, I will dig into the fundamentals. But I encouraged everyone, if you like any of these chart patterns I'm showing you, do your due diligence. Now, with that being said, if you don't have time, well, there's a setup, and it's just a setup until and unless that trend line breaks, and then you had that initial target here. So I'm not going to spend a lot of time on that. Just showing you that some of these have played out. And those that I didn't, that didn't look bearish haven't broken down yet. Here's one, a little bear flag right here. This would be your flagpole, even though you don't see prices. If you put on a line chart, you'd see the price right there. You'd see prices moving down. Line charts show that move, but when you have a gap, you don't see it. And so where I'm going with this, there's your flagpole right there. If you add the flagpole to where the bear flag is, that gives you a measured target. So again, there's just a potential for a lot more downside in these stocks as much as they've already fallen. Now you have to be selective. Here's one that didn't break support yet. You have to wait. Um, when you see some of these stocks that I've already covered that were, in meltdown mode already, that's not the most objective time to add. You want to look for objective entry. So an objective entry here, this is one that was covered in the video, TPRE, third point reinsurance. We never really fully formed that right shoulder. I said that would have been nice to see a little thrust up. But either way, we did break this uptrend line. Not a lot of reactions, but what I'm looking at also is this horizontal support level. So this one's sitting on the cusp. Any more downside, and that one's likely to go down here. I'd say minimum down here about 13.15. Not a huge trade, but still decent. About a 4% drop if that target's hit. ACGL, Arch Capital, I think I might have covered that one already. It's at the first support. If I didn't, I'm covering it here. But I do expect it to continue down to at least this level, another 4% downside or more. And again, possibly more. Depends on what this storm does. VR, this one was covered in the video back here a week ago. So you can see a stock that's already down 14%. RE I just covered earlier. You can see that meltdown there. RNR was covered in the video. Again, just huge, gains in short order, 10% there so far. And oh yeah, I think I already covered that one earlier. Jumped back out to my list now. Got away from the video. RGA, official trade idea, targets there, and I think I covered that one as well. Okay, that was the reinsurance sector, and then in that video I also covered just my favorite, and I'll go over those right now. Some of those, my favorite picks in the sector. Those are with these blue flags here. So we only have a little over half a dozen, less than a dozen names. But there's a sector itself, just to kind of give you an idea where things might be going. You can see support from about where we are now. And, we had a nice move down already. You can see, I think it was right up here when I covered it a week ago. We were at support. And so that sector has already dropped about 5%. And there's a support zone here, but this is the if things get ugly target. And so far, it's not looking good. So I still think there's some opportunity here, especially if you're willing to ride out any counter trend bounces, try to short these strategically. You either short on a bounce back to resistance, former support once broken becomes resistance, or you can wait for a break of support. Now that's the sector itself. And again, I don't believe any ETF exists to short solely the property and casualty insurance companies. You can short XLF, and obviously that's going down because insurance is a big component of the financial sector. You have banks and insurance companies in XLF. But this is more of a pure play on the storm, as well as charts that were already confirming a bearish move. So Travelers Group, I highlighted it last week, this uptrend line, as well as a horizontal support level. Both have broken, and you can see since then that since an entry was triggered, you're already up about 4%. I don't have any price targets on that right now, but it does look to be going lower. There's Lowe's, symbol L. That's not Lowe's, the home improvement store. This is a property and casualty company. You can see their breakdown, and this one looks good, ultimately down to this target here. So there's another one with a lot of meat on the bone, hence the reason for this video, another 7% downside. XL Capital, just a nice meltdown since the breakdown. I showed you this ascending price channel recently broke down. And again, there was a nice trade on that one. Now this one is coming up to support. So here's one, for example, if you took it after the video, then you probably want to consider covering right here. The risk reward is rapidly diminishing on this one. That means very little downside potential. That doesn't mean the stock can't continue to melt down. It just means I don't get greedy. If I see a support level and I get a trade that drops, over 10% in less than a week, I'm looking more to cover profits or to book profits than I am to add on to that position or looking for any more downside. Get in, get out. The markets price things in almost instantaneous. They were behind the curve on this one. We were lucky to sniff these out last week, but the professionals, the big boys, the smart money, they're in these now, and they're not going to wait until the storm hits. They're pricing in worst case scenario in many cases, so you don't want to wait. I plan to be out of most of these, most likely before the storm actually, either hits the U.S. or comes close. NMIH. Here's one that's ready to go, yet to break down. They had support right here at 1036, roughly. Call that 1035. We're right at 1035. Tried to break it intraday, but so far we're still above it. So there's one just waiting, basically just wait to see this one take out today's lows or an impulsive move down through 1035. And that one's good all the way down here to about that's the 856 area. That's 17% more downside in that one. Plenty of meat left on the bone there. Okay, there was that. I was just checking that price alert that just triggered. I had a price alert set on this one, probably to go over, maybe on the 60-minute time frame, but looks like that one's already hit. This was a trade idea earlier. They clipped the stop on it, but it still looks good. You can see that breakout of a downtrend line PRGO. That's in the healthcare sector. Again, nothing to do with this video. Just looking like it's moving up, and those are the additional targets for anyone still in that one. But let's get off that. I just wanted to check that price alert. Next up, that was covered last week, was the in the property and casualty insurance industry is SAFT, Safety Insurance Group. We had this trend line here, broke. Just beautiful technical analysis and all this. This is where technical analysis and fundamentals come together. You can see the technicals, they give you your entry points. You had a breakdown. If you missed it then, it gave you another opportunity in this back test of the trend line. Just beautiful, example of how you can trade. You can trade a breakdown and or add or initiate a position on a back test. And so far you had impulsive selling, it rolled over, and I don't see any reason this one's going to go, not going to come down here. Anything is possible, but that would be a minimum target, and that still gives you another 4% downside. So hopefully some of you caught this one. Do I like to enter here? Not really. If you didn't already, because this is what I refer to this as technical no man's land, meaning the stock is smack in the middle between support, i.e. a target, and resistance. I like to either short breaks of support or bounce backs, I should say a bounce back into resistance. I had a hard time spitting that one out. So, but either way, if you're in it, it looks good right now. Just, trail your stops, set stops to break even, protect your profits, whatever your preferred trading style is. Here's WRB, which is WR Berkeley Corp. There was the short entry trigger on a break below 65.74, playing out nice so far, down about almost 5%. and probably going to continue on down here at about the 59, call it $60 level before all is said and done. So more meat left on the bone, but again, this one's sort of in technical no man's land between resistance, former support, which is now resistance, and then the next target around $60. ALL, all stay. This one, beautiful, pattern, nice, well-defined trend line, rising wedge or contracting price channel. More really, I'd call that a contracting price channel. You see the divergence high, the negative divergence confirmed a likely trend change. The breakdown was your entry. Divergence in itself is not a sell signal, merely an indication of a likely impending trend change, and that's what we had. Your sell signal came on the gap down below, the break below that trend line. That one didn't run. You had plenty of time. It sat there and finally started moving down after the video on Friday, and it's already dropped about 5%. And I don't see anything slowing this one down until it gets here down to about 83.12. So you might want to cover a little bit above that, and that's another 3.5% downside. And this is the what I call if things get ugly target. That's about another 12% downside in Allstate. CB, Chubb Corp, beautiful, well-defined trend line goes all the way back to 2015, and divergent high, everything you like to see. Break of both intersecting uptrend line and price support there with that horizontal line. I'd love to see those dual levels taken out with gap down below it, but it wasn't a runaway gap. You could have easily shorted that gap the day of the gap down. And we're right now dancing at support. Looks like it wants to break that support level. We're a little bit below that support line, but we've had a few punches there. Either way, I think it will go, and ultimately it takes us down here. This is a 130.24, that support level, so maybe cover a little bit above that. That gives you about another 4% or so downside there. Okay, two more to go after this one. We'll wrap it up. KNSL, Kinsale Capital Group, breakdown, back test, rollover. We've hit the first support / target level at 35.05. So once the $35 level goes, we probably move down here to 33, which is a decent move. That'd be a drop of about another 6%. Maybe more downside, but that's where I'd be covering on that one. Don't believe I'm personally short that one, but a lot of these I am. AFG, sending price channel breakdown, and just beautiful. Look at that impulsive price action. And again, this one was pointed out as a setup within the pattern. You broke down, had plenty of opportunity on Tuesday. It broke down, moved down low. It's already hit the first price target. So there's one that's already provided in just a few days a gain of about 5%. We are at support, but I favor a continued move down here. Whether we get a reaction at support or not, that'd be about an 8.2% gain. That level's about 93. We'll call it 93.25, and then ultimately probably work our way down here to about the 88.15 level, and that'd be a gain of about 13% on the trade. You can see it when I zoom back out. There it is. And the last one, again, these are just the ones that I covered last week, trying to keep consistent. There are some others now that stand out, but too much. If I see one that's really compelling, I'll post it as a trade idea. But again, please remember the reason I do these videos, there's too many. I can't possibly annotate all the charts, do all the updates as official trade ideas on all of these. But if I didn't like them, I wouldn't highlight them in the video. KFS, Kingsway Financial Services, this one's dancing on support, has another support level here. So this is more of a support zone, and I'd have to look at the weekly chart to really get a good idea on this one. But I'd say if it breaks that bottom of that support range, it's probably going down to about 480, 485 or so. All right, let's wrap it up there. If any others stand out, I'll follow up in a static post or maybe even a separate video. This has been Randy Finney with Right Side of the Chart. Hope you enjoy.